Hello, Accounting Superstars. This is Professor Don Bush from the Accounting Superstar channel. I've been a professor for about 30 years and a CPA for about that long, and I've got great ways to explain accounting. I've got a knack for making it easy. That's what I do. Okay, so here we go. This is, the fifth lesson on job costing, the journal entries for job costing. And today we are focusing on under or overapplied manufacturing overhead. Super easy, a piece of cake. But here's what I want to do first. I want to quickly review what we've learned so far about manufacturing overhead. And you're wondering, hey, I didn't learn anything about manufacturing overhead. Well, I've got videos on this. And if you go to accountingsuperstars.com, I've got all my videos listed by topic. So you can find them, all right? Make it easy on yourself. accountingsuperstars.com. Also, hit the like button and the subscribe button. That way YouTube knows that you like these videos. I know you like these videos, and I'll make more for you. All right. So here we go. Manufacturing overhead. So first, a review, really fast review. And if I lose you, then go and watch the other videos on accountingsuperstars.com. So here's manufacturing overhead. It consists of three things here. Indirect labor, indirect materials, factory costs. Indirect labor, those are people who are very important in the factory, but they do not actually build the product. In this case, sailboats, all right? So they don't actually work on the product. So what I've got here, I've got a fella here who's the janitor cleaning up the factory. Indirect materials, I've got a bottle of glue here to represent the indirect materials. Indirect materials are items, materials that are very important. You have to have them, but they're either not expensive or they're not worth tracking, or maybe they're just so darn difficult to track that it's not worth it. So things like glue, caulking for around the windows, sandpaper, probably varnish, grease for the machines, things like that. There's probably a million different things, but they're items that are important but not worth tracking real carefully. And other factory costs, things like insurance, property taxes, heating the building, so on and so forth. There's a lot of things. I wrote down some examples here real quick, like indirect labor, factory janitor, factory supervisor, inspectors, inventory manager, indirect materials, glue, sandpaper, grease, solder, and other factory costs. You know, things like factory insurance, factory property taxes, factory security, factory maintenance. So here's a journal entry. So when a company incurs factory overhead, that is overhead that pertains to the factory, they make a journal entry. And here it is. It's manufacturing overhead for whatever the amount is. And we credit probably different kinds of payables. In this case here, property taxes payable. So it could be the lease for the facility, could be the supervisor's salary. It could be a lot of things, whatever the overhead is. And we call this the actual overhead because this is what's really going on. This is the actual overhead. So this is the journal entry to make it happen. Now, this manufacturing overhead is just a holding account. It doesn't. It's not a permanent account, but there is a general ledger account called manufacturing overhead, and it's being debited for $20,000 in this case because that's what the journal entry says right up here. So what's going on with this manufacturing overhead account is that we debit it for actual overhead. The actual overhead, the overhead that's really happening, all right? So as we're proceeding through the year, overhead that is incurred, property taxes, insurance, indirect materials, you name it, all kinds of things. So manufacturing overhead. Manufacturing overhead is simply just a holding account. It's not a permanent account. So on the left-hand side here, this actual overhead, this is money or numbers going into the account here. All right, so how does this work here? Well, we've got to allocate this overhead to the different jobs. So here's an example, the predetermined manufacturing overhead rate. So Sunset Sailboat Company allocates manufacturing overhead to sailboats being constructed, and it's going to go into work in process at a rate of $1.50 for every dollar of direct labor charged to a sailboat. So in other words, in this example, for every $1 of direct labor, we're going to add in $1.50 of overhead, all right? And for example, $1,000 of direct labor was used to construct the sailboat Summer Breeze. Therefore, $1,500 of manufacturing overhead will be applied to the boat Summer Breeze. So here's how it works. work in process. So overhead is being charged to Summer Breeze, the boat. Summer Breeze is a boat that the company is working on. And we're going to credit manufacturing overhead for $1,500. So what is happening here, ladies and gentlemen? We are crediting manufacturing overhead. And this is called the applied overhead because it's being applied to the job. All right. And I know if I'm going fast, go to accountingsuperstars.com and you can see this in slow motion. All right. So here's what's going on. On the left-hand side, this is the actual overhead. On the right-hand side, this is the applied. So these are numbers coming in, and on the right-hand side, numbers going out. So in this case, right now, the balance is, I don't have a balance. All right, well, it'd be, what, $18,500. But the manufacturing overhead account is usually a very, very large account. It includes so many things. All right, so coming down here, so here we are, we're going down to the work in process. So this applied overhead, we're applying it to a job. All right, there we are. Okay, and then the work in process inventory, it's got to be updated for that applied overhead, so $1,500. There you go. Because the work in process inventory account and these job cost sheets need to match. At the end of the day, whatever these job cost sheets add up to, that's what the work in process should add up to. The job cost sheets support the work in process inventory. All right, so let's get to the lesson today. So that was a really fast review, guys. And like I said, if you want it slowed down, go watch the other videos at accountingsuperstars.com. All right, so here is what's happening. Let's pretend that we're at the very end of the year. And we're we're closing out the accounting system here so we can print the financials and report on what's going on. So here's the manufacturing overhead general ledger account. It's the exact same account that we were looking at right up here, okay? But the numbers are going to be different because it's the end of the year and a lot has happened during the year. All right, so here's the ledger account. So as you have already heard a couple of times here, the left-hand side is the actual overhead incurred. So whenever they have property taxes, insurance, indirect labor, indirect materials, it goes on the left-hand side. And then when they apply the overhead to jobs, it goes on the right-hand side. So left-hand side is money coming, well, not money, but numbers coming in. And on the right-hand side are numbers going out. And it'd be really great if it equaled. It'd be a miracle, actually. It never equals. So, but we need to force it to equal. We need to make it to equal. So here's a question. Well, what if actual is greater than applied? In other words, what if the left-hand side ends up being larger than the right-hand side? What are we going to do? Because it needs to end up being 0 because it's just a temporary account. So here's what we do. Here's some numbers. All right, so at the end of the year, the actual is $1 million, okay? It's just, that's the actual overhead throughout the course of the year. And the applied is $990,000. So we were close. It was really close, but we need to close it out. We need to make it equal to 0. And right now it's equal to $10,000 on the debit side because the debits are bigger. So what we need to do is we need to close this thing out and make it 0. So we need to credit manufacturing overhead to make it equal 0. So let's make a journal entry, and sure enough, let's credit manufacturing overhead. There we go. And that credit will end up here on the applied side. And now everything's good. It's all equal to 0. So, okay, great. Well, we have a half a journal entry here. So what are we going to debit? Well, what we'll do is we'll offset it against cost of goods sold. We'll actually increase the cost of goods sold by $10,000. So what that means, what it all means here is during the year, we had no idea what the actual overhead was going to be until the end of the year. And when we apply overhead, we're making a guess. And it turned out our guess was pretty darn good. We were only 10,000 off. But we need to fix it. We need to zero out the manufacturing overhead account. And so what we'll do is we'll just charge it to cost of goods sold. And that's what we did. Right there's the journal entry. Now, What if the opposite happens? What if applied is greater than actual? So let's look at the applied. And this is a different example here. What if the applied was 825,000? So we look at the actual and we say, okay, actual, what are you? You were 800. So we over applied by 25,000. Still, we were close, but we're off a little bit. And right now, manufacturing overhead has a credit balance of 25,000. So what that means is we got to close this out. So how are we going to close it out? Well, if we make a journal entry and we debit manufacturing overhead for 25,000, that will close it out. And you know what? Our balance will be 0 and it'll all be good. So what are we going to offset it by? Well, what did we offset it by last time? Cost of goods sold. What we'll do is we'll reduce cost of goods sold by 25,000 and all will be good. Everybody will be happy. So I hope this lesson helped you out. Check out accountingsuperstars.com to see more of these videos. And I wish you good luck here in your accounting studies. And hit the like button, the subscribe button. That way I'll know you like these videos. YouTube will know you like these videos and all will be good. Until next time, over and out.